Hello everyone, it's Ted Bauman of the Bauman Letter here at Banyan Hill Publishing. I've been working on my own cars for a long time. The first car I ever got was a 1967 Volkswagen Fastback, I think they were called. And because I didn't have any money, because I was in high school, I had to learn how to work on it myself. I've been kind of sticking with that ever since, and so I pay a lot of attention to what's going on in the automobile market these days. And I've picked up a trend which I think could be potentially profitable for you. Let's look at the backdrop. Edmunds.com, which is probably one of the country's main automotive sources of information, estimates that the average price of a new car in the United States is over $35,000. The main reason for that, I think, is because, well, on one hand, manufacturers have been adding lots of new features to cars. But the other thing is that because interest rates are so low, dealers can hike up prices and still keep the monthly payment reasonably low. But that's starting to push people out of the market, so they go where they normally go when they can't afford a new car. They go to the used car market. Problem is that used cars are also becoming very expensive. The average price of a used car sold at a full-on dealership is over $20,000 now. Now, there's a reason for that, and it's one that I think illustrates the kind of logic I use when I look for opportunities at the Bauman Letter. Remember that the average origin age of a used car when people go shopping for a good one is about 7 to 10 years. So we're looking at the supply of used cars in the United States being cars made between about 2009 and 2012. If you recall, something very specific was happening at that time. We were in the midst of probably the worst financial crisis we've ever seen in our lifetimes. The result of that was that many of the big auto manufacturers in the United States laid off workers, closed plants, and cut production dramatically during those 3 years. That means that the supply of used cars for this particular time period now is at historical lows. And of course, when supply is low but demand is high, prices go up. The result is that U.S. auto buyers are increasingly looking to even older used cars. In fact, the proportion of cars over 16 years or older on American roads is over 50% now. It's increased by 20% in the last few years alone. Now, the upshot of all of this is that people are going to start doing what I do, which is basically to work on their own vehicles. I have a hobby vehicle, a 2001 Jeep TJ, which I've pretty much completely rebuilt by myself, but I'm the exception. But there's another guy who lives in my neighborhood who works in his garage fixing cars for other people, and he's doing a roaring trade. And there are people like him all across the country who are increasingly providing repair services so that people can keep older vehicles on the road, simply because those are the vehicles they can afford. Now, besides my neighbor, who's going to benefit from that? Well, I would expect auto parts companies to do that. Now, one of the interesting things about the auto parts sector in the United States is that some of the biggest players like Napa are in fact privately held, and they are basically franchise operations. So we can't participate in that market. But there is one major company, which is O'Reilly Auto Parts, ticker ORLY, which is publicly listed, and I like them a lot. I think that they are going to do very well in the next couple of years, precisely because of this confluence of factors that I've described. Now, O'Reilly is up nearly 50% in a year, and you know what kind of a year we had last year. So that means that this is a very well-run company, and I think it's got room to run further. So take it from me, this is the way that you can ferret out good deals in the stock market, even when there are clouds hanging over it. No matter what happens, somebody somewhere is going to be making money as a result of all the turbulence, all the ups and downs that happens in markets unrelated to stocks, like the used car market. This is Ted Bauman signing off, and don't forget I have a Facebook page, Twitter feed, and various other ways that you can tap into my insights. Signing off, we'll see you again soon.